Okay, welcome back. Commodities in focus, and Manisha is with us in festive attire. Manisha, good morning. Gold and silver, unstoppable run.
Oh, well, yes, I wish I could talk about something else, but it is gold and silver which continue to make headlines. So take a look at the gold prices. Every single day when you wake up and the Asian markets are nearly $30 to $50 to $60 on the higher side. As you can see, we still are trading $40 on the higher side. 43.80 is an all-time high that we have seen happen in case of gold prices. It has been one very, very strong run. We started this year with 26.50. We are trading at 43.80 right now. So, yes, it has been a 62% of a jump up that we've seen happen in case of gold prices there. And with that, it's a 64% of gain as well. Various new factors that have come into the market which are supporting is the U.S. credit market concerns. Well, remember, last 24 hours, this is what has been on the street's mind. And this has led to a decline in the global equities as well overnight, whether it has been about Europe, U.S. markets closed lower as well. And that in turn also seems to be supporting gold prices. And then you have U.S. and China trade concern. The rhetoric from both countries does not stop. And that does well for the bulls who are into the gold markets right now. It also is about the prolonged U.S. government shutdown. Until that continues, why would you short gold? And that's exactly what the markets are doing. The U.S. Fed rate cut expectations when that meeting happens on 28-29 October is almost factored into the prices right now. With the kind of run-up that we have seen in case of gold, if you look at the overall global market cap of gold, that now stands at a tall $30 trillion. We've seen a very strong run-up coming for this one. But the one question that everybody is asking and talking about is, on where is gold headed from here? And that's exactly what we have for you in the next plate here. So you have Societe Generale Bank of America talking about $5,000 an ounce in the next year. That's exactly what the latest report from JP Morgan also says. Goldman Sachs as of now says 4,900. But remember, we are still talking about 2026, and these targets can perhaps change. For this year, by the end of 2025, the targets were for around 3,500. We are trading at 43.5 right now. So 5,000 by end of 2026 is what we are looking at. So clearly, even with this run up, the banks and brokerages believe that it is going to be higher highs from here on as well. Take a look at some other banks as well. Blue Line Futures talks about 5,000. Stancy is talking about 4,500 as an average. So clearly, they expect higher prices there. And then ANZ is talking about 4,600 by June 2026. The second half of next year perhaps could be slightly different depending on how things change when it comes to tariffs, geopolitics, US dollar index. So there's plenty to watch out for. And I have saved JP Morgan for the end because he's talking about, Jamie Dimon clearly has talked about 5,000, 10,000, take a pick kind of a conversation. So clearly we are looking at very, very bullish gold prices there. And then you have silver trading at a record highs on your screen. It has been 0.5% of a gain as we started Asian markets today for this one as well. For silver, everything that is about gold is working for silver. And in addition to that, you have seen, prices rise by 85%. So it's outperformed gold on a very, very strong basis there. And then you're looking at a global supply crunch that's fueling a historical rally here. There is a silver squeeze happening in the international markets. The US and China trade concerns, almost everything is supporting silver. And at this point in time, it is 50% of silver usage that you're seeing in industrial markets. So that is something that you don't have a proxy for. And with the deficit, very, very supportive. So while we're trading at $54 an ounce right now, Bank of America, ETO markets are talking about $65 an ounce by next year. SD Bullion talks about 75. Motilal Oswal came out with a report yesterday. They're looking at 55 of an average in next year. And for the Indian markets, Motilal Oswal says that you could be looking at prices of 2,40,000 rupees by next Diwali. So that's the kind of bullish cue still continuing when it comes to gold and silver.
Well, dazzling moves there, Manisha. Thank you very much for that. And that's a topic we continue to sort of focus on for the rest of the day and as we go into Dhanteras tomorrow. Thank you very much, Manisha. We'll take